Great. Well, thanks everyone for joining. Really good that you could come and that you also have been able to, that you can hear me, and you should be able to see my desktop now as well. I do want to draw your attention to the disclosures prior to this webinar beginning, and then we will get going. But obviously this presentation is provided solely as a courtesy to the aid of the education of our customers and prospective customers. It will discuss risk management concepts, strategies, and does not include recommendation or endorsement of any particular security chart pattern or investment strategy by Forex.com. This presentation has been prepared without regard to the specific investment objectives, financial situation and needs of any particular recipient, and we do not guarantee or verify the accuracy of the information or commentary provided. It will include references to actual past trading results. For discussion purposes, past results aren't necessarily indicative of future results. And do remember as well, guys, that obviously increasing your leverage increases your risk, and any reference to historical price movements or levels are informational based on our analysis, and we do not represent a warranty that any such movements or levels are likely to recur in the future. Futures, options on futures, foreign exchange and other leverage products involves this substantial risk of loss, and they're not suitable for all investors. Spot gold and silver contracts, they're not subject to regulation under the US Commodity Exchange Act. Contracts for difference, that is CFDs, they're not available for US residents, and none of the service or investments referred to in this presentation are available to persons residing any country where the provision of such services or investments would be contrary to local law or regulation. So now we'll get on to the fun stuff. Just bear with me one moment while I switch a few bits around. I've basically had a bit of a problem with my machine seems to think or wishes that it was still on bank holiday, because I've got a bit of a problem with my resolutions on the screen, so I do apologise for that, but hopefully you can still see it. If anything, it just makes it larger. Yaz has asked me to look at the Aussie. Well, that's exactly what I'm starting with. Again, sorry about this. Let me just bring this down to a more manageable size. Here we go. This is Aussie yen, and I bring this up because the Aussie and the yen have both had quite big and important movements so far today. Now, as we start a new week, obviously yesterday was a bit of a false start to the week, really, because it was really thinned by holiday markets. So we had the US out, the UK out. Things have picked up. They've got a bit more directional today, but we've still got a very slow start to the week. So markets have almost gone to this kind of default action, which is, well, when there's not bad news, or when central banks aren't kind of threatening to ruin our big our party, then what we're willing to do is to sit there and buy up risky assets. So what we've seen is the Aussie yen, which, remember, those of you who like who want just want to understand how some pairs behave, Aussie yen is a good one. It's traditionally very, very sensitive to changes in risk sentiment. So by that, or what I mean by that, is that the Aussie tends to be at the risky end of the FX spectrum, with the yen as a safe haven. So when we get changes in risk sentiment, you put those two together, and you do tend to get some quite important moves. So, for example, today, as we've seen a better tone to risk sentiment, we've seen the yen sell off across the board, but we've also seen Aussie yen be one of the key beneficiaries of that change. So as you can see here, this is the 100-day moving average. It's just a simple moving average that I've used. Now, we're currently above there. That 100-day it comes in around about 98.50. We're currently trading just below 98.70, so we're at the highs of the last trading session. But it's whether or not we can get to life above 99. We haven't so far. Let's just narrow our time frame down a tiny bit. As you can see there, 99 has been a bit of a short-term double top reversal pattern. So that suggests that we've got a short-term top place there. That we've got a short-term top in place there. So, and added to that, we're also looking just at the hourly MACD. This also starts to look just a bit stretched to the upside. And remember, when that happens, Richard has just said that he enjoyed my book. Thank you very much. Richard, I'm glad you did. It's a very short, easy read, but hopefully it gives you some new perspective. But anyway, going back to Aussie yen, as you can see here, Aussie yen, when you tend to get, like the MACD is a real momentum indicator, but when things tend to be stretched one way or the other, the upside in this case on the hourly, then it can suggest that a reversal is going to take place. Now just look at the daily, and you see the opposite thing happen. So on a longer time frame, what we're seeing here is that the Aussie yen looked very kind of stretched to the downside. And indeed, if I just add, let me add the RSI in here too. Yeah, as you can see, it looked very, very oversold as well once we got below that 96 level, which we did at the end of last week. In fact, we were there earlier today, actually. So no doubt that we had a pullback, but one thing I am kind of, looking at, I still see the outlook for the Aussie being quite challenging, largely because of, the reason why I see it being quite challenging is mostly because of the end of the commodity boom, which we'll talk about more actually in our quarterly, which will be released, our Q3. Can you believe it? We're thinking about that already. That'll be released on the 18th of June. But the reason why I bring it up is because obviously, what we're getting, what we're seeing here is quite, whether or not, when you get to these points, it's like, well, how long will this recovery last? That's what you want to know. Do I expect, Pam's asked a good question, do we expect it to retest 100? I think that's going to depend on the backdrop. I don't think that we can say right now momentum will just push it up there, because I think momentum is still cautious. So, our very short term, like less than 24-hour opportunity that we see in this cross is potentially any pullback to 98.20 is like, may attract some buying interest, but then running into resistance ahead of 99. So just kind of short 50, 60 point moves or gains if we do drop back to that 98.20 level. So do I expect it to retest 100? I guess the answer to that question, Pan, is not directly. I think it will depend on a sharper drop lower on the yen, because obviously. Oh, sorry, you were talking about dollar yen as well. Okay, cool. Well, because obviously, in this sense, the two of them are quite moving. I'll talk about dollar yen in a moment. But it's relevant for Aussie yen as well. Do I expect it to test 100, or do I expect it to kind of continue to extend gains? Not at the moment. I'm going to need to see some more. I'm going to need to wait it out a bit. And obviously, dollar yen, obviously, Aussie yen is a good derivative, I suppose, of dollar yen and Aussie dollar. So we'll take a look at those two now as well. Let's start with the dollar, with the yen side, and then maybe we can answer that question, Pan. Now I'm going to remove that study just so that we've got more space here. There we go. Okay, so this is dollar yen. As you can see here, it's come off its highs. Still very much range bound. This is the daily chart. Still very much range bound. That's the first thing to notice. As you can see, the RSI isn't really telling us anything. It's saying that above 103, towards kind of 103.30 to 70, which is the highs from last week, we were looking very, very overbought. And since then, as one expects when you get kind of a stretched RSI, we do get a bit of a reversal. But as you can see here, the downside has been very limited as well, with 150 acting as very good support for now. So in terms of do we get sub 100, I'm not 100% sure. Now I also just want to show you my other chart. Just going to show you a Bloomberg chart here of that as well. Because as you can see, I'm just using the Bloomberg chart because I quite like them. But as you can see here, yes, we've had a bit of a sell-off. obviously, but we're still within this uptrend channel. Oh, that was the wrong one. We're still in this, we're still trending higher in our view. Yes, we bounced off the back of it. It's if we were to get below 120, which I've mentioned to you guys before, that to me would be a very, very bearish development, which would then open the way to this 98.50 level, which is that 50-day moving average. So a lot of people have mentioned that. All eyes are on that 98.50 level, I think, or a lot of eyes are on that 98.50 level, because below there really does negate this uptrend that we're seeing in dollar yen. So, for us, where are we? Where's the very short-term opportunity? Because I know a lot of you are retail traders, and thus you are short-term. We've had a big move higher. We've moved up a kind of 150 pips. Right now, 102.40 is attracting some selling, some good selling, but then we think any kind of move back towards 101.80 could attract some buying, because right now we just don't think there's we think it's kind of a range-bound market. So in that sense, just narrow down your investment time frames, and just don't try and get the big we're not going to get a big trend move right now. That's what I'm trying to say. We have got some important economic data coming out of Japan on Friday morning. By the time we get in, now I don't know if some of you are based in Japan or in Asia, but basically all morning, very early morning London time anyway, a lot of Japanese data will be released, including key inflation data. That's going to be any sign of kind of weakness in the data. Well, it could go either way. It could be a very choppy day, because if the inflation is weak, what does that mean? Does that mean that the new stimulus plan isn't working, or does it mean that there needs to be more of it? If there's more of it, then surely that's going to be yen negative. We're going to see dollar yen maybe retest those 103.70 highs. So that's kind of the key thing, there that we're looking at. And right now, yes, we're in recovery mode for yen, but what I'm trying to say on a broader based prospect is that we're not really it's not really telling us anything. We're still range bound. Likewise, let's take a look at Aussie. Now, Aussie has been really interesting, and Aussie, we think that there's a little bit more opportunity here for recovery. So this is a daily chart, and this is the RSI. So those of you who know the RSI, anything around below 30 is considered oversold, and here we are at 23. Very, very overextended on the downside. As you can see, we dipped below 96 earlier, or in the last few days. Since then, we've recovered a little bit. Let me just take a look. Sorry, you said Yaz has just asked, short-term bottom is set in the Aussie, or would you require a move above 98.40 to confirm that? Well, I'd be very cautious to call a bottom right now. I think this could be a short-term move, but we think that there could be a bit of a space for recovery for a move back towards that 98.40 level, which I assume are these highs that take place here. I'll also take a look at the Loonie, Gabriel, because it's a big week for there. But just Yazza, just going back to you, this is the 98.40 level. I'm assuming that you're looking at, and I mean, right now for us, this reversal, I would say pullback. I'm not willing to say reversal quite now, again, because I think it will really depend. Yes, the dollar could turn bid again, but hey, we could get some more, some weak consumer confidence data out of the US later on today, and that could change things again. So right now, going very much with price action. Let's take a look, narrow the time frame again. As you can see here, right now, 96.80, so just below that 97 level, where there is some selling interest. So, definitely not right now willing to say that, we've turned a corner and that we've got a reversal going on. If anything, a pullback kind of maybe to those 96.20 lows could attract some short-term buying interest, but I would say if you're looking at the Aussie right now, it's a short-term recovery. If we did get above 98.40, I would change my view. But until then, and the fact that we're not even really making much traction above 97 suggests to me that we're in a short-term recovery and that we could range trade 97 on the upside, kind of 96.90 to 97.10 on the upside. And then on the downside, as I said, anything around about 96.10, but then once we get below 96 towards those 95.80 levels, we are looking extremely oversold and people are coming in to buy. So again, the Aussie is also, in recovery mode. However, if we see a stronger bullish turn in the dollar, that could be what weighs on the Aussie, and it's no surprise. As you can see there, nice kind of double top there in the short term. is there an economic reason the Australia is weak? Against the Kiwi? I think that's what you mean, Pan. Well, more broadly speaking, there are a few economic reasons why the Aussie dollar is weak, and these are kind of long-term things. Number one, the end of the commodity boom. A lot of people, commodities really aren't making much traction. They are. The Australian government itself has actually said that it thinks that it thinks that the commodity cycle is peaked, that mining investment is peaked, and that we could be in for, a bit of a decline in prices. This is bad news for Australia's economy because commodities are its largest export. Added to that, its largest export partner is China, and China's having a slowdown. And then on top of that, you've also got the RBA cutting interest rates, and that we all know here that currency is very sensitive to interest rates. So when you cut interest rates like they're doing in the RBA, and keeping this very dovish tone to all their commentary, that is also currency negative. So, to answer your question, why is it relative to the Kiwi? It's because the Kiwi suffers from those problems as well, but just to a lesser extent than the Aussie. So, for example, it's less reliant on commodities, and although China is important for New Zealand, it's not as important as it is to Australia. So there is a fundamental reason as well for this for the sell-off. So the fundamental reason is for the sell-off. The technical, and they're still really in play, and we think we could get lower because of those very weak fundamental backdrop there that doesn't seem to be bottoming anytime soon. But obviously you've got to look at the technical picture when you're a shorter term trader, and right now that's just in a bit of a pullback, bit of a recovery mode. Anything below 96 is looking just a little bit too oversold for this market. That doesn't mean that we won't get below there, but it just means that a good pullback would be quite healthy. We could trade sideways for a little bit. That often happens in a trend like this. Take a look at it. Obviously we've got used to the Aussie just declining so sharply for most of May. I mean, it's been a horrific performer, but it's it does kind of move sideways. As you can see, before that moved sideways, then it lowered itself. A sideways move is very normal in the middle of a trade, and sometimes they can last a couple of weeks. Euro yen, Addie's asked for. I'll happily talk about Euro yen because again, it's in this recovery mode. It's had a nice, very nice recovery there, but we are running into some resistance around about 132. Let's take a look at the hourly. As you can see here, 132. Again, the recovery happened pretty much during the Asia session and the beginning of the UK session, but then it's since just fallen back a little bit. But we do think any move towards 131, 131.20. We've heard that there is some short-term buying interest in there. So that's kind of the key thing there. Stuart. Stuart, I will answer your question in a moment. I'll just finish my thought on Euro yen. As you can see, just on a short-term basis, 132 looking a bit oversold. So that's kind of where we're at right now. There aren't any big themes generating the market. It does seem to be positioning. So for me, kind of maybe this yen, the yen, the pullback that we've seen, the expectation that, a lot of people were looking for a real healthy pullback, not just in some of the FX crosses, but mostly in stocks. However, that's been short-lived. But the one thing I would say is I wouldn't rule that out right now. There's just been certainly anyway, for things like kind of Euro yen and some of the FX crosses, what we're seeing really is just a bit of position adjustment. We're seeing much more bullish sentiment right now in the markets, in the stock markets. European stocks are up about over 1% today. We're not, the currencies seem to be leading stocks right now. So those, the fact that the risky FX, the gains have kind of stuttered as we get to these big levels like 132, like 97 in Aussie dollar, 132 obviously in Euro yen, and above 102, kind of 102.50 in dollar yen. We are just kind of stuttering a bit and pulling back, and that suggests that maybe stocks are just playing catch up, and they'll also, they may run into a bit of resistance going forward. So still very much range bound, we would say. Stuart's just said Japan is Australia's second largest trading partner. If the yen weakens, will Aussie weaken? That's usually how it does tend to happen. It is, obviously it's a very important, Japan, as you rightly point out, a very important trading partner for Japan, for Australia as well. Also remember that they're competitors as well in some ways, because they both want to compete for business in China. And if China's economy is weakening, then you're going to need a weak currency to try and sell your goods there and make your goods competitive there. So yeah, I mean, they do kind of, it's not a direct correlation, but there certainly is something there. I mean, people have also questioned whether or not the sell-off in Japanese government bonds, where the yield has been very, very erratic recently, if that's not to do with the Aussie as well. So that's another thing to mention. Now, let's just take a look at euro here, since we're on euro yen, and then I'm going to look at gold as well, and some of the commodities, because I do think they're quite interesting. As you can see, euro very much trading in a range. We still think that that we could go lower from here. That the outlook is still quite weak. We've got some strains popping up in Spain. Do you remember that bad Bankia? It's bad Bankia, but Bankia is one of the toxic banks in Spain, and its share price has gone crazy the last couple of days. We haven't seen it impact the Spanish 10-year bond yield, but we are watching that closely. So follow us on Twitter on Forex.com. If you're a client of ours, you can check us out on Forex Insider. But we are following that closely, because right now that looks like the biggest sovereign risk on the horizon, and what we're seeing is just euro-dollar really trading sideways. It hasn't managed to extend gains above 129.50, but yet kind of below 129, 128.80 looks like fairly good support right now. However, let's go back to the daily quickly. We are still looking, that this recovery looks fairly tepid after getting kind of all the way below 127 at one point. We still think that we're likely to get there. Right now, kind of momentum, let me shove up the momentum, hang on. Again, it's flatlining, it's moving sideways. We don't really have too much in terms of economic data coming out of Europe, not till later on this week when we get some more May data. That could be the next kind of key driver. We also don't have many, top-tier central bank speakers. So again, it's just a bit of a waiting game really right now as we wait to see what can move 1 point. Stuart said, dropping the Aussie interest rate to 2.75 is not far away from the rest of G10. Interest rates, Kiwi interest rates 2.5, so attraction to Aussie diminishes from overseas investors looking for higher yields. Well, yes, I mean, that is absolutely one of the points, and that's what I mentioned at the beginning. That's also why, the rate differential between not just the Aussie and Kiwi, but the Aussie and a lot of other things has narrowed considerably, even though the absolute level of yields is still quite high. It's quite a bit higher in Australia than it is elsewhere, but especially in the case of Aussie dollar, because now people are talking about the end of QE3, that's having quite the impact really, and that's why we've seen that sharp move lower in Aussie dollar. Let me just get rid of this study. But let's take a look at Euro Aussie quickly, because what you'll see is that Euro Aussie still has also pushed higher, but today it's still lagging the Aussie. We're still in this this risk on, risk off mode, just temporarily. Just seems like today. But look, let's take a look here on this side here, 134.50 looks like a good level of resistance there, medium-term top, or short-term top, sorry, in Euro Aussie, at least for now. Whereas we are finding some support around about 133.30, but just looking at this on a broader-based basis, the Aussie has been weak across the board partly because of that change in the interest rate differential. Now I'm going to look at gold, and then I'm happy to take a couple of questions. I think gold has been, it's always interesting to watch it, but it hasn't really gone too far. It's really caught up in the middle between the dollar rebound and its own domestic drivers, which have so far been quite bearish, really, for gold. When the dollar weakens, obviously, the gold price should move higher, but it hasn't had a huge move higher. The sell-off in gold is not really. I mean, it's really just. This is a daily chart anyway, but it's kind of gains have been fairly lackluster, but we are finding quite good support below that 1350 level. 1320 is a massive support level. So I think in the absence of any big drivers, we may have to wait for that June FOMC meeting, which takes place on the 19th of June, to really get any direction here. But I think that, gold going forward is going to be driven primarily by fundamentals, and from a technical standpoint, I think it's going to be kind of range trading. As I said there, 1320 on the downside, 1470 on the upside. That seems like quite a wide range, but gold can really move very, very quickly. As you can see, that's just 2 days worth, and that was $150. Let's just draw down this time frame, and as you can see, yet again, very kind of range bound, not really going anywhere. Let's take a look at silver. Silver has come under pressure, or had come under strong pressure the last few days. The last few days, as you can see, it had its kind of mini meltdown alongside gold, but then it also fell quite sharply last week. But it still is managing to find very good support around about that kind of just ahead of, or just around about $22 per ounce. Now, some people had been looking for it to get down to 20. There really isn't too much of a reason to suggest that it won't. Certainly momentum seems to be, there aren't many buyers coming in. That's why the recoveries have been quite weak in these precious metals. So there is definitely a chance for it to do it, but we just don't have that driver yet. We need one of those drivers, and I think the driver could potentially be, something from the Federal Reserve suggesting that the end of QE3 is really going to happen in the next kind of few months, which is obviously what Bernanke signalled could potentially happen. And then obviously, if we don't get that, then we could be in recovery mode. But for now, it seems a little bit like kind of treading water in these precious metals. Have you got any questions? I'm happy to take a couple. Oh, dollar CAD. Yes, sorry. I had said I'd talk about CAD. My apologies. Last Carney meeting at the BOC tomorrow. And then comes in the new guy, Stephen Pollards, which his background is actually working for the export, the kind of the big representative company for exporters in Canada, which a lot of people have thought that maybe he's going to just go on the dovish side because he wants to export Canadia's economy out of trouble. The Canadian economy is pretty lackluster. I'm not saying that it's doing that badly, but it is pretty lackluster. And what we've seen really is dollar CAD really become a beneficiary of that. Obviously the CAD as well is a commodity currency, so it's fallen a little bit in line with what's happened to the Aussie and the Kiwi. It's not been as poor a performer, but it's certainly been up there. So this break above its range, kind of around 103.30, we're not making too much traction on that. We may need to wait to hear from Carney tomorrow, even though it's his last meeting. If he kind of there's a potential that he may pave the way. He's been quite measured, actually, in what he's been saying of late. He's been very measured and has actually been almost cautious in the tone of his BOC statements. If he ditches that, then what we could see is just that other leg higher that we're looking for in dollar CAD. Now, as you can see, the high was from the 6th, which came in, it was from June, my apologies, in 2012, so the 6th month of 2012, I should say, and that came in at 104.5. So we are getting to, some key levels, some massive resistance levels. I think if we get a dovish Carney, that could be what kind of gets us above that level. But remember, a lot of this kind of recovery in dollar CAD has been on the back of, expectations that the new governor will be dovish. So, we could maybe, get a push towards that 104.50, but I think we're going to have to wait till kind of the June and July meetings really over the next few months to see whether or not we can really kind of break some hurdles. Otherwise, I see us kind of range trading for a little while in dollar CAD. But in the very short term, let me just move back to this. I'll go back to our hourly chart. In the very short term, as you can see, sellers coming in 103.70, but yet this kind of 50-hour or 100-hour moving average just below 103.40 should act as fairly good support. So any dips back towards kind of 103.40, maybe even 103.10 to 20, could be acted as good, could be used as good, buying zones. But I mean, overall, I'm not going to, sit here and say that they're easy trading conditions right now. The market is kind of in reflective mode. It's deciding what to do, which means narrow your time frames down, look for your ranges. It can be quite a useful exercise, perfectly tradable, but it just means that the market is pausing for breath at the moment, deciding what to do, bit of positioning going on. But again, take advantage of all those opportunities if the market sells off too much, if it starts to look a bit oversold, particularly on the shorter term basis, on the 60-minute, the 30-minute, that type of thing. That offers opportunities. Likewise, if you get too stretched to the upside on the short term, it seems like people are coming in and willing to kind of sell things there. Rather than take directional moves, they're willing to kind of book profits or trading ranges. That's kind of been the order of the day. But that's about it from me. It's 10:30, so I'm going to go now. But thank you all so much for joining, and please do join us next week for more. Thank you. Great. Thanks, everybody. Good luck trading this week, and we will join you all, or I will join you next week for more. Thank you.